Hello everyone, this is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you the Week in Focus for the week beginning the 30th of May. Well, it's looking to be a busy week. Starts out slow with the US and UK on holiday today, but by the end of the week, an ECB meeting, an OPEC meeting, the US non-farm payrolls, and the rest of the May PMIs should present plenty of trading opportunities. Now, the ECB is widely expected to keep its policies unchanged, as it has several times before recently. Note, though, that euro-dollar has fallen following 5 of the last 8 ECB meetings. We could see a similar knee-jerk reaction again, even in the absence of any change in policy, although much will depend on the result of Tuesday's Eurozone CPI. OPEC, meanwhile, is barely functioning. I don't think anyone has any illusions about the possibility of a new agreement to restrict oil production. Nonetheless, the absence of any agreement could be negative for oil prices and therefore negative for oil currencies such as the Canadian dollar. Now, the US ADP report on Wednesday and the non-farm payrolls on Friday will be the biggest indicators of the week. The market's looking for non-farm payrolls to rise by 160,000. That's somewhat below the recent string of 200,000 plus rises, but it's still pretty strong. That should be enough to keep June and July tightening hopes alive without tipping the scale decisively in either direction, a recipe for volatility. The remaining purchasing managers' indices for May will be released on Wednesday, including both of the Chinese manufacturing PMIs and the US ISM Index, Institute of Supply Management indices. The latter is expected to fall, which could prove problematic for the dollar. Other major U.S. indicators out during the week include the Dallas Fed Index, the Personal Income and Expenditure, the Beige Book, trade data, and factory orders. In the EU, the background for the ECB meeting will be set on Monday, when Germany announces its CPI for May, and Tuesday, when the CPI for the bloc as a whole is announced. The question is whether ECB officials are more concerned about the data on the past or are looking to higher inflation in the future thanks to higher oil prices. Japan's industrial production is expected to show output declining, which is never a good sign. More importantly, Prime Minister Abe may use his speech Wednesday at the end of the current session of Parliament to announce the delay of the consumption tax hike and perhaps also to call a snap election for the lower house. These actions, if they occur, would probably weaken the yen. In that case, will the yen strengthen if he decides otherwise? It's not clear. Wednesday is the big day for the UK. The manufacturing PMI, nationwide house price index, and mortgage approvals will be released then. Otherwise, the construction PMI on Thursday and the services PMI on Friday are the only major British indicators. The manufacturing and service sector PMIs are expected to rise. That could calm the growing fears that more is wrong with the UK economy than just fears about Brexit, and it could boost sterling. Elsewhere, the Australian dollar may see some volatility as Australia announces its building approvals, first quarter GDP, trade balance, and retail sales. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.